Okay, so let's unpack all this, shall we?
Yeah, let's dive right in.
The U.S. election results are in,
Big news.
and Trump's victory has got everybody talking.
Everyone's buzzing for sure.
You sent over some fascinating reports from Julius Baer and Elara Securities.
They're two really interesting perspectives, I think.
And they're both packed with insights into what this means for the global economy.
Definitely, we're talking about the implications for everything.
We're talking everything from our portfolios to gold prices to the U.S. dollar.
Right, and I think what's so fascinating is how these reports approach the same event through different lenses.
Okay.
One is really focused on the investment side,
right,
and the other digs into the fiscal implications.
I like that. Two different perspectives.
Yeah.
But first things first.
Yeah. Let's start with the results.
It's a Trump win.
That's right.
And it looks like a Republican sweep across the House and Senate is pretty likely.
Very likely.
So what does this mean for the economy?
Well, both reports actually predict a potential boost to U.S. growth.
Okay, interesting.
They point to things like extended tax cuts and looser regulations.
So classic Republican strategies.
Yeah, exactly.
Doesn't that usually mean inflation could heat up?
That's the trade-off, right?
Right.
Stimulating growth often comes with the risk of rising prices.
Okay, so that's not really a surprise.
Not really.
But Julius Baer throws a bit of a curveball here. They suggest that while tariffs might be inflationary for the U.S.,
right,
they could actually be disinflationary for China and Europe.
Interesting. Right.
Wait, so U.S. tariffs making prices drop in China and Europe?
It seems counterintuitive, but it's all about global trade dynamics.
Okay, I'm listening.
So think about it this way.
Okay.
Tariffs raise the cost of Chinese and European goods coming into the U.S.
Right.
So U.S. consumers might buy less of those goods.
Less demand.
Exactly. And less demand usually means lower prices.
Oh, so it's like a domino effect across global trade.
That's a good way to put it.
Okay, that makes sense. It really highlights how interconnected the global economy is.
It really does.
Now let's talk about something a little closer to home.
Sure.
Our wallets.
Ah, yes. The important stuff.
What's the word on the street for investments?
Well, Julius Baer is bullish on U.S. equities.
Okay.
Especially in cyclical sectors.
So they're thinking a rising tide lifts all boats.
Yeah, basically if the U.S. economy grows, those sectors are likely to benefit.
Makes sense.
And they even name-dropped a few companies that could benefit.
Oh, yeah, like who?
They mentioned J.P. Morgan, Citigroup,
okay,
ConocoPhillips, and Chevron.
Interesting. A pretty diverse mix.
Yeah, and Elara Securities echoes this sentiment, but they add an interesting comparison.
Okay, what's that?
They say a Trump win is more favorable for U.S. equities than a Harris win would have been.
And why is that?
Specifically because of her plans to raise taxes.
Ah, right. Higher taxes usually mean lower profits for companies.
Exactly.
Which can make investors less enthusiastic.
That makes sense.
Okay, let's move on to something I know a lot of people are curious about.
Sure.
Gold.
Uh-huh.
It sounds like investors are cashing in on that gold rally.
Yeah, that happened leading up to the election.
So buy the rumor, sell the fact.
Seems that way. But Julius Baer has a really interesting take on this.
Oh, really? What's that?
They believe that the long-term impact of the election on gold is less important than what central banks do, especially China.
Why China specifically?
They're increasing their gold reserves to lessen their dependence on the U.S. dollar.
So the real story here is a power play between China and the U.S. with gold as the weapon of choice.
It's definitely a shift in the global financial landscape.
What does that even mean for us?
Well, when central banks, especially one as big as China's, make major moves in the gold market, it creates ripples across the whole system.
Okay, so gold is one to watch closely.
Absolutely.
Now let's talk about a market where the ripples are turning into waves.
Let's do it.
The digital asset world. Crypto, it seems like Elara Securities is saying that Trump's pro-cryptocurrency stance could fuel a rally.
It could.
And wouldn't you know it, Bitcoin hit all-time highs on the news of a Republican sweep?
It's a perfect storm for crypto enthusiasts.
Right.
A potentially friendlier regulatory environment plus increased investor interest.
Leading to a significant rally.
Potentially.
Both reports agree this shift in the regulatory landscape could mean big things for the future of cryptocurrencies.
Big things.
It's almost like we're on the verge of a new financial era, with crypto becoming more mainstream.
It's an exciting time for sure.
But let's bring things back down to earth for a moment.
Okay.
And talk about oil.
All right.
What's the forecast there?
Well, Julius Baer predicts oil will trade towards $65 US.
Okay.
And they don't expect any major shifts because of the election.
So no drama in the oil markets.
Not from the election, at least.
That's somewhat reassuring, but I have a feeling things are about to get a lot more interesting when we start talking about U.S. fiscal policy. Alara Securities is painting a pretty complex picture there.
They are. And they make a point that really stands out to me.
What's that?
They say no matter who won the election, the U.S. fiscal deficit was going to be a problem.
Okay.
But with a potential Republican sweep, things could get even more precarious.
Yikes. Just how bad is it?
Well, they highlight that the IMF projects the U.S. fiscal deficit to be higher than emerging markets over the next 5 years.
Wow. That's a pretty startling statistic.
It is.
Not exactly what you want to hear about the world's leading economy.
Right.
So we have this potential economic boom on the horizon.
Yeah.
But looming over it is this massive debt cloud.
It's a tricky situation.
Sounds like we're heading straight into more uncertainty.
It's hard to say for sure.
What does this all mean for the U.S. dollar?
Well, Alara Securities believes it's going to get stronger, at least in the short term.
And why is that?
They cite a few factors.
Okay.
Lingering election uncertainty, sharper rate cuts in the EU.
Wait, back up for a second. What do they mean by sharper rate cuts?
So basically, the European Central Bank is trying to stimulate their economy by making it cheaper for businesses and individuals to borrow money.
Okay.
And they do this by lowering interest rates.
Got it.
Which can sometimes weaken their currency.
Okay. That makes sense. So in comparison, the U.S. looks like a safer bet right now.
That's part of it.
Even with the looming debt.
Yeah. They also point out that asset managers are unwinding their short positions on the dollar.
Meaning?
Basically, it means that big investors who are betting against the dollar are now changing their minds and buying it back.
Oh, so that signals growing confidence.
Exactly.
So a stronger dollar seems likely in the near term.
It seems that way.
But there's a catch.
There's always a catch.
Alara Securities also suggests the U.S. dollar's appeal could wane in the medium to long term.
Right.
Why is that? Is it because of that massive debt burden we were talking about?
That's definitely a factor, but they also point to sticky inflation.
Sticky inflation. What does that mean?
It means that inflation is stubbornly staying above the target set by the Federal Reserve.
Okay.
And if the U.S. economy overheats and inflation stays high, it could erode the value of the dollar.
Make it less attractive to foreign investors.
Exactly.
Interesting. So it's a mixed outlook for the dollar. Strong in the short term, but potentially weakening down the road.
Right. It all depends on how the U.S. government manages its fiscal and monetary policies.
Can they control inflation and reduce the debt burden without choking off economic growth?
That's the million-dollar question.
It really is. And it leads us to our final stop on this leg of our journey.
Okay, where are we going?
India.
Ah, yes.
Alara Securities paints a mixed picture here.
They do.
On the one hand, a Trump presidency is generally viewed as positive for Indian equities.
That's right.
Certain sectors like IT, pharma, EMS, and defense stand to gain.
They do.
But on the other hand...
There's always a... But isn't there?
What's the downside?
Well, they warn about the potential impact of higher tariffs on Indian manufactured goods.
Oh.
And this could hurt their exports, especially if tariffs on China increase as well.
So it's a delicate balance.
It is.
Potential wins for some sectors, but also potential losses for others.
Right. It really depends on which sector you're looking at.
Okay.
They also predict the USD INR exchange rate could rise to 84.5.
Okay.
Which is something to watch closely.
Why would that be? What are they expecting to happen?
They're predicting a weakening rupee.
And why is that?
They believe the rupee could be under pressure because of several factors.
Like what?
Well, first we have the strong U.S. dollar, which tends to put downward pressure on other currencies.
So we were just talking about how a strong U.S. dollar could impact the Indian rupee.
Right.
And now I want to circle back to something we touched on earlier that really grabbed my attention.
Okay.
The potential for U.S. tariffs to actually lower prices in China and Europe.
Oh, yeah, that was a surprising one.
It really challenges how we usually think about tariffs.
It does?
Right, because usually we think of tariffs as making things more expensive.
Yeah, for everyone involved.
For everyone involved.
Right.
But this idea that U.S. tariffs could actually benefit consumers in China and Europe by driving down prices.
It's a game changer.
That's a game changer.
Yeah.
It really underscores just how complex and interconnected the global economy is.
It does. Sometimes actions intended to help one country can have unintended consequences for others.
Right.
And in this case, it could actually be a positive thing.
So what could this mean in the long run?
That's a good question.
Could we see a scenario where tariffs are used strategically to manage inflation across different regions?
It's possible. It definitely raises some interesting questions about how governments might use tariffs as a tool in the future.
Makes you think.
It does.
Now let's shift gears a bit and revisit the topic of cryptocurrencies.
All right.
It seems like they're on the verge of a major breakout.
Yeah, especially with a potentially more crypto-friendly environment under a Trump administration.
I have to admit, I'm still a bit skeptical about all this.
Understandable.
Is this just hype, or is there real substance behind this potential crypto boom?
Well, remember how Alara Securities highlighted the growing influence of cryptocurrency in U.S. elections?
Yeah, they said 1 in 5 voters in battleground states considered it a major issue.
Exactly. That's a significant number.
It is.
It suggests that crypto is becoming increasingly mainstream, and politicians are starting to take notice.
They have to.
This growing awareness and acceptance could drive further adoption and investment.
Okay.
Which would support the idea of a sustained rally.
So it's not just about speculation and quick profits.
Not necessarily.
There's a real shift happening in how people view cryptocurrencies.
It seems that way. As more people understand the potential of blockchain technology and decentralized finance, the demand for cryptocurrencies is likely to increase.
Okay.
And with a potentially more favorable regulatory landscape, that growth could accelerate significantly.
I'm starting to see the bigger picture here. It's not just about the price of Bitcoin going up or down. It's about a fundamental shift in how we think about money and finance.
Exactly. We may be witnessing the early stages of a major transformation in the financial system.
Fascinating. Now, while crypto is definitely a hot topic,
it is.
Let's not forget about more traditional assets like gold.
Of course.
It seems like investors are taking profits now that the election is over.
It does seem that way.
But what about the long-term outlook?
Well, we talked about how Julius Baer believes that central bank actions, especially those of China, will be more important for gold than the election results themselves.
Right. But what does that mean for everyday investors like me?
Well, gold is often seen as a safe haven asset.
Well,
during times of uncertainty, investors tend to flock to gold.
To protect their wealth.
Exactly. And with China steadily increasing its gold reserves, it could signal a long-term strategic shift away from the U.S. dollar.
So even though gold might experience some short-term volatility, it's still a valuable asset to hold, especially if you're concerned about geopolitical risks.
Exactly.
And the potential decline of the U.S. dollar.
It's all about diversification and managing risk.
Okay.
Gold can be a valuable part of a balanced portfolio.
Makes sense. Now, speaking of risks,
yes,
let's address the elephant in the room.
Well, what's that?
Inflation.
Right.
Both reports predict that a Trump win could lead to higher growth.
That's right.
But also potentially higher prices.
Yeah, that's the trade-off.
And that's a concern for everyone.
Of course, no one wants to see their purchasing power eroded by rising prices.
So what can we do to protect ourselves from the potential risks of inflation?
Well, one strategy is to invest in assets that tend to perform well during inflationary periods.
Okay, so things like
commodities, for instance, often see price increases when inflation rises.
So things like oil, gold, agricultural products?
Exactly. Those could act as a hedge against rising prices.
Okay, what?
Real estate is another asset class that tends to do well during inflationary times.
And why is that?
As the cost of goods and services increases, so does the value of the underlying land and property. And because real estate is a tangible asset, it can provide a sense of security during times of economic uncertainty.
Makes sense. Are there other options?
Sure. Inflation-protected bonds are another option.
Okay.
These are bonds where the principal and interest payments are adjusted for inflation.
So that makes a lot of sense.
Yeah. These assets could act as a buffer against rising prices.
Okay, but what about the stock market? How might it react to higher inflation?
Well, it's hard to say for sure. Some companies are better positioned to handle inflation than others.
Right.
Companies with strong pricing power.
Meaning they can increase prices without losing customers.
Exactly. They may be able to maintain or even grow their profits during inflationary periods.
So stock picking becomes even more crucial in an inflationary environment.
Absolutely. You need to carefully analyze companies and understand how they might be impacted by rising prices.
Okay.
Look for businesses with strong brand loyalty, a competitive advantage, and the ability to adapt to changing economic conditions.
Solid advice. Now let's shift our focus to a topic that's probably keeping a lot of people up at night.
What's that?
The U.S. fiscal deficit.
Right.
Elara Securities is particularly concerned about this.
Yeah, especially with a Republican sweep.
And they didn't mince words when they described the situation.
They didn't.
They point out that the U.S. fiscal deficit is projected to be higher than that of emerging markets over the next 5 years.
It's a startling statistic.
It's not exactly a vote of confidence in U.S. fiscal responsibility.
No, it's not.
Yeah.
It sounds like we're on a path that could lead to some serious consequences down the road.
It does. So how will the U.S. government address this growing debt burden?
That's the question.
Without sacrificing economic growth?
Right. Will they cut spending, raise taxes, print more money?
It's like trying to solve one problem without creating another even bigger problem.
Exactly. It's a delicate balancing act.
It really is. And the decisions they make will have ripple effects.
Not only across the U.S. economy,
but across the global financial system as well.
It's true. Now, speaking of ripple effects.
Yes.
Let's talk about the U.S. dollar.
Okay.
Elara Securities expects it to strengthen in the short term, but potentially weaken down the road.
Right. We talked about how they attribute the short-term strength to things like election uncertainty and a weakening Japanese yen.
Right.
But they also warned that a rising debt burden and persistent inflation could erode the dollar's appeal in the long run.
It's definitely a possibility.
So it's another one of those good news, bad news situations.
It seems that way.
Strong now, but potentially weaker later.
It all comes down to how the U.S. government handles its fiscal and monetary policies.
Right. If they can control inflation, reduce the debt burden, and maintain confidence in the U.S. economy, the dollar might remain strong.
It could.
But if they fail to address these challenges,
then
we could see a decline in the dollar's value.
It's possible.
Which would have significant implications for global trade and investment.
Absolutely. It's a reminder that we live in a complex and interconnected world.
We do.
What happens in one country, especially a country as powerful as the United States, can have ripple effects that are felt across the globe.
And that's why it's so important to stay informed.
It is.
And be aware of the bigger picture.
Absolutely. The more you understand about the forces shaping the world around you, the better equipped you'll be to make informed decisions about your finances and your future.
Absolutely. Now let's shift our attention to India.
Okay.
We already talked about how Elara Securities has a somewhat mixed outlook.
Right.
Seeing both potential wins and losses for the Indian economy.
They do.
Right. They highlighted how sectors like IT, pharma, EMS, and defense could benefit from a Trump presidency.
Yeah.
But they also warned about the impact of higher tariffs on Indian manufactured goods.
Right. It seems like India's economic prospects are caught in a tug of war between these competing forces. It's a delicate balance for sure. And to make things even more complex, we have to consider the impact of a potentially weakening rupee.
Right, we touched on that earlier.
We did.
But can you remind me why they're predicting a weaker rupee?
Sure. They believe the rupee could be under pressure from several factors.
Okay.
First, we have the strong U.S. dollar.
Right.
Which tends to put downward pressure on other currencies.
So we were talking about why they're predicting a weaker rupee.
Right. A strong U.S. dollar puts downward pressure on other currencies, but there's more.
What else is putting pressure on the rupee?
They also point to rising U.S. yields.
Okay.
So when U.S. interest rates go up, it attracts foreign investment to the U.S.
Okay.
And this can lead to capital flowing out of other countries, including India.
And that can weaken their currency.
Exactly.
So it's like a seesaw effect. Money flows into the U.S. seeking higher returns, and that can make the rupee less attractive to investors.
Precisely.
Okay, what else?
Then there's the weakening Indian earnings cycle.
The what?
The earnings cycle.
What does that mean?
Essentially, it means that company profits in India have been slowing down.
Okay.
Which makes Indian stocks less appealing to investors.
So less attractive earnings prospects combined with the appeal of higher U.S. interest rates.
Right.
Create a double whammy for the rupee.
It's a situation.
And to make matters worse,
oh no,
they also cite foreign investors selling pressure.
Oh boy.
So we have foreign investors pulling their money out of India, further driving down the value of the rupee.
Unfortunately, yes. It's a combination of factors all creating downward pressure.
Okay, so it paints a pretty complex picture for India's economic outlook.
It does.
On the one hand, they have the potential to benefit from a Trump presidency.
Right.
But on the other hand, they face these headwinds from a weakening currency and global economic shifts.
It's a reminder that every opportunity comes with its own set of challenges.
It really does. It seems like there's no such thing as a free lunch in the global economy.
There isn't. Everything is connected.
Every action has a reaction.
Right. And understanding these interconnected dynamics is crucial for making informed investment decisions.
Speaking of informed decisions, you brought up something earlier that I think is incredibly important.
What's that?
The need for education and critical thinking.
Oh, absolutely.
In a world that's overflowing with information.
It's more important than ever.
It really is, especially when we're constantly bombarded with news and opinions from every direction.
It can be overwhelming.
It's like trying to drink from a fire hose.
I like that.
And with the rise of social media and the spread of misinformation, it's harder than ever to know what to believe.
It is harder than ever.
How can we become more discerning consumers of information?
That's the key question.
And avoid falling prey to these misleading narratives?
Well, first, it's crucial to question everything. Don't just accept what you read or hear at face value.
Even if it comes from a source you trust.
Even then,
Yeah.
you need to do your own research and come to your own conclusions.
So healthy skepticism is key.
Absolutely.
Okay, what else?
And challenge your own biases.
Oh, that's a tough one.
It is. We all have biases.
Right.
And they can cloud our judgment.
How do we even know what our biases are?
It takes conscious effort and self-awareness.
Okay.
Ask yourself why you believe certain things.
Okay.
Where those beliefs came from.
Uh-huh.
And whether you're open to considering alternative viewpoints.
That's really hard.
It can be, but it's essential for growth.
Okay. And I guess most importantly,
Yeah.
seek out multiple perspectives.
Right. Don't limit yourself to a single news source or echo chamber.
It's easy to get stuck in our own little bubbles, especially online.
You need to expose yourself to different ideas and different ways of thinking.
Like looking at the world through a keyhole.
Yeah, a very small keyhole.
You might see a small part of the picture.
Right.
But you're missing the bigger context.
Okay.
By actively seeking out diverse perspectives,
Yes.
we can broaden our understanding and make more informed judgments.
It's the best way to learn and grow.
This has been an incredible deep dive.
It has.
We've covered so much ground.
We have from the potential economic boom in the U.S. to the challenges facing the Indian rupee.
From the future of cryptocurrencies to the importance of gold as a safe haven asset.
We've explored how the U.S. election results could reshape the global financial landscape.
And we've emphasized the importance of staying informed,
Yes.
questioning everything,
Right.
and embracing critical thinking as we navigate this increasingly complex and interconnected world.
Knowledge is power.
Yeah.
And the more you know, the better prepared you'll be for whatever the future holds.
That's a great note to end on.
It is.
Thanks for joining me on this deep dive.
My pleasure. It's been a fascinating conversation.
Until next time, stay curious and stay informed.